Hey, good morning. It's May 23rd, Friday, going to the Memorial Day long weekend here in the United States. NASDAQ's down about 1%, and the other markets are down a little bit too, similarly. So, what's driving it down looks like maybe some tariff threats from the Trump administration on EU trying to escalate the trade war there because perhaps they're not finding agreement or far from finding agreement, and so he's threatening the EU with 50% straight 50% tariff on EU imported goods beginning next week. Wow, that's just very hostile. And also he's saying, I guess he's pressing Apple to want to make the iPhones here in the United States. Yeah, good luck with that. That's just crazy to be able to make an iPhone cheap here in the United States and run a factory and labor and wow. All right, well, for Tesla, which is in our scopes, is down like 1.5% today. So that's good for us because earlier this week we sold a call contract for 360 strike at 258, and then we bought it back at 82 cents. We pocket those the profit yesterday, and then we jumped back on the Tesla boat again, and we sold another call contract. We waited for a little bounce, and we did get the little bounce. And after we got the little bounce, I sold it a strike. The strike price is $3.55 now, $1.63. So that was yesterday, and now because it's gone down a little bit, that contract is worth 7.5 cents. So as we speak, I'm gonna buy it out and collect the profit of about 155.50 here. Well, I'm going to buy it for 8 cents, so it's going to be our profit's going to be 155. There we go. So let me do this, and the reason for it is like we're good. I mean, it's we can make one more quick buck today. So I looked at Carvana, and it's got high implied volatility, but we have to come really close to the price to be able to get anything decent, and it's like 301 right now, 0.62 volatility. So let me take a look at the Carvana option chain again. Yeah, so 301, 305, you get $1 for one contract, $1.09 here. I'm not really comfortable with that. I mean, like it's almost 302 now. I think it can go into the money easily on 305. Maybe I would prefer to go back and make another play on Tesla and make it a triple this week. So is that 350, 335, 340 here, which I don't really want to do 340, but just looking at it, it's $1.27. There's 342 and a half for 77 cents and 345. You know, in these flash markets, and we got only one day to play here, the premiums are a little bit more on the thin side. So this is what you have to work with, and one might be tempted to be aggressive and take the risk of it going to the money and not making money on that, and maybe even backtracking you a little bit. For me, I think I want to take a little bit more risk and make it worthwhile, but not that much risk. So let's just sell one contract at 345. It's not a whole lot to profit, but I want to continuously be consistent at making profits. So yeah, in this environment, lesson learned, I mean, like, or my advice to you is like, don't try and press it too hard. So here we are, 52 cents. So we sold it for 52 cents. So if it goes into expiration out of the money, it's another $50 in our pocket. And this week has been more of a less how do you say, exciting week relative to last week, because there was a lot of earnings that we played on, stock earnings, and we were perfect last week, so we made a good amount of money last week, or the previous week to last week, the record week, the first week of May. The second week we got torched by Tesla, and then we got it back on Kava, so we broke even. So yeah. Anyways, yeah, looks like we're gonna have a profitable week this week, and but the key point here is one might be tempted to be more aggressive, and my advice is try not to be, and rather stay on course and just make a little bit less than what you think you should make, but you're still making money. All right. I hope the day treats you well. I'll catch you next episode. Don't forget to like if you haven't liked yet, and you do like, and subscribe if you haven't subscribed so you don't miss an episode.